Decentralized finance, or DeFi, has taken the world by storm. Throughout 2020, tokens that are native to DeFi systems have exploded in value. The amount of capital locked inside of the DeFi ecosystem has also risen astronomically. This has correlated with an increase in the number of users in the DeFi space. However, the fast rising popularity of DeFi can make it easy to forget how very young the ecosystem is. That is, until there is a hack, software exploitation, or a data leak that reminds us all. Recently, Finance Magnate spoke to Erick Pinos, the America's ecosystem lead at Ontology, about how decentralized on-chain identity can be used to make the DeFi ecosystem more secure, as well as to expand the number of use cases for DeFi platforms. I'm Rachel McIntosh, and this is FMTV. Erick, first of all, I want to thank you so much for taking the time to talk to me today.
Yeah, thanks for having me.
Absolutely. So I know who you are, but for our listeners, our readers who may not know about you, can you talk a little bit about yourself and the work that you do?
Yeah, my name is Erick Pinos. I'm the America's Ecosystem Lead at Ontology. And what we focus on, or what I focus on there is specifically working in the US and Latin American regions to expand our use cases. And what Ontology focuses on is enterprise level blockchain use cases centered around decentralized identity. So we work a lot on use cases like decentralized certificates, decentralized medical records, working with autonomous vehicles, decentralized credit scoring, use cases that need an element of identity that work on a blockchain layer. So our technical stack has like the base layer, public blockchain, can also work with private blockchains. And on top of it, there's a decentralized identity layer, which lets us go into these use cases of like supply chain and these use cases of identity and data sharing, data privacy that kind of help us tackle those markets very effectively.
I see. Yeah. So digital identity is one of those things that, that we've sort of talked about a lot in the blockchain world, but it's sort of rare to see it actually being implemented in a practical and effective way. So can you talk a little bit about sort of the practical implementations of Ontology?
Yeah, so I think the most practical implementation we're working on right now is actually revolving around DeFi. So a big element of DeFi is the ability to make decentralized financial transactions that are more complicated and more complex than just basic send and receive transactions. Through decentralized finance, you're able to do things like decentralized lending, decentralized mortgages, not decentralized mortgages, we'll get to that in a bit.
Okay.
You're able to do things, decentralized lending, exchanges, insurance, borrowing and lending, all of the things that you can do. You can lock tokens up and do streaming payments, right? Really, and then you can stack things on top of each other. So you can have these decentralized autonomous organizations that are responsible for issuing out, for determining the rates for loans and for borrows. So, it's a lot of opportunities, a lot of innovations, and they're called like money Legos because you can stack them on top of each other. So there's that composability and the access to the different APIs. But one element that's really missing is the identity element, which enables a whole different level of things, because a lot of it right now is collateralized, right? So because you don't know who anyone is, there's no level of trust or reputation, then you have to over collateralize your activity so that if you run away with like money that you borrowed, right, you get your stake and your collateral slashed, so it gets repossessed, or you get liquidated, right? That's another word for it. So with identity introduction, because you're introducing identity now, you can have elements of reputation. You can have elements of reputation, and you have elements of being able to attach real world items to it. So with the reputation element, now you could have lending, decentralized lending, where you don't have to over collateralize. You can just collateralize, or you can maybe even with really good reputation, might not need to collateralize anything at all. You're just like trustworthy, right? It's like your credit score. Now you have decentralized credit scores. That's something that Ontology is working on, and we have platforms that we're integrating our decentralized credit score with. So we have a decentralized credit score called OScore, and we're working with Wing platform, which Wing is launched on the Ontology network. And so that's a lending platform on Ontology. And you can use your decentralized credit score to get access to better rates, and you have lower collateral requirements. Right? So that adds like a whole new element. And then also by adding identity, you can also bring in more real world assets. So like previously mentioned, like the mortgages, you could have your house and you can tokenize your house, and then you can use that for a decentralized mortgage. And there would be no way to do that without having a way to like capture the identity of the house and to put it into the blockchain, to represent it on the blockchain, so you actually have an asset, and then to tie it to your real world identity for this particular financial transaction.
Okay, I see. So in the sense of tokenizing a house and putting it on to Ontology's blockchain, does that mean that the house essentially, becomes owned by security tokens, or what does that sort of mean in a legal sense?
Yeah, so with elements of a house, right, and ownership of a house, there's a couple of projects that are working on that. And
okay.
the way that like I think the industry is approaching it is for a house, yeah, it's like a security token because it's ownership shares, right? So it is straight up ownership shares with the house deed in a tokenized format. So that would be a security token. It would have all the requirements that are around it, right? So like in terms of who can buy it, who can sell it. Like I think a lot of them, you'd have to require to KYC to own, right? And to make sure you're an accredited investor. So that's another element that is pretty important for why you need to have on-chain identity, which, one thing that we're working on as well is the decentralized KYC. So if you verify yourself once through the know your customer requirements, you now have the certificate that's an on-chain certificate. And that authenticates you for future transactions you need to do where you need to KYC yourself. So rather than having to re-KYC yourself for every single service, you could KYC yourself once and then use that certificate. So it kind of works together. So like some tokens, like some of these tokens are open for anyone and just some of these services are open for anyone. But with the introduction of KYC, you're able to offer the ability of these more advanced use cases. Like, okay, yeah, like for the tokenized house, you want to purchase tokenized. If you want to purchase whatever tokens, then yeah, you could just go and buy them. But if you want to purchase tokens that represent ownership in this house, then you need to KYC yourself. In which case you could use Ontology's KYC solution to KYC yourself, then giving you access to buy that house.
Okay, yeah, that's decentralized KYC. Like that is so cool. So can you talk a little bit about how decentralized KYC keeps users, customers' data safe?
Yeah, so exactly like I mentioned, like the idea of verifying yourself once and then being able to reuse that same verification. Because right now there's a situation where you have to verify yourself many different times for each service that you need to use. So you have to re-upload, say, your passport photo, right? You have to re-upload it to all of these websites. You don't know how. Everyone's doing KYC in a slightly different way. And so now your passport picture is on the servers of all of these different websites. And half of them go bankrupt, and now they have copies of your passport just sitting on these bankrupt servers that who knows who will purchase and repossess them in the future. Right? So it's like, you don't know what's going to happen there. So the way that decentralized KYC keeps you safe is through verifiable credentials. So verifiable credentials are a component of a decentralized identity system where everyone has their own decentralized identifier that identifies who they are, and you sign it. So it's just like a public key, private key. And so you use your private key to sign a credential to verify that it came from you. And then that creates a hash of the credential, which is a verifiable proof that the credential is true. And then you can share that hash. So when you share that hash with someone, you can authenticate yourself and you can prove that you actually signed it at this time. It's kind of like how DocuSign does the legal documents, that instead of signing was just like, your name or your e-signature is like, there's a cryptography element to it, right? So there's a level of encryption, and it adds a hash, so you can verify that it actually came from your account. It's kind of the same thing where, you know, instead of choosing to share your information each time, is you can verify your identity and then just share that, like, that hash that just proves that you verified yourself at this time. And for many use cases, that's enough. So you don't have to share all your information each time. Once you get into the level of zero knowledge proofs, that's something else that really, I think, will change the game, because that, what zero knowledge proofs essentially let you do is it lets you break apart your identity and share specific components of your identity to different individuals. So you don't need to know, like, I think the classic example is like when you go to a bar, right? Is if you have to give them your license when you go to a bar to show that you are actually over 21. And that's all you need to show them, is that you're over 21. But in order to do that, you have to give them your driver's license. Your driver's license has your age, your height, your weight, your home address, all this other information that they don't need to know. So if you can just share with them that one data point, like, am I over 21 or under 21? Yes or no? And you have a hash attached to it that proves that, like, you know, this information is true mathematically, then that's all you need. So it creates like a much better system where you're not sharing your entire identity every single time. Instead, you're sharing the specific, just enough data that's needed for each individual party to verify yourself to use that system.
Right. So could this, you know, obviously, yeah, there's sort of a built-in layer of security just from the fact that less information needs to be shared. But I wonder, you know, is this something that could be implemented, for example, on cryptocurrency exchanges? Because we've had over the last year, maybe 2 years, like, you know, several, maybe even a dozen or so instances of these really widespread KYC hacks, where it's like, even if the exchange itself isn't hacked, this user data, email addresses, passport photos, etc., kind of goes everywhere. So is this something that something like a cryptocurrency exchange could use?
I think so. I think that the other thing, right, is that the other element of it is the localization of data, right? Like you're moving towards keeping the data stored locally. So in our case, a lot of the certifications that Ontology uses, like for the KYCing and for the credit scoring, those are stored locally on the phone. So you have them locally on your phone. So you can't really go and hack Ontology and then have all of the KYC data, because we don't have it. And like it's on the user's phone. So it's like, it's all localized. So I think, like, as more and more companies move towards using that as like a way of storing data, and as these decentralized storage solutions kind of take hold, it's going to get harder and harder to do these kinds of hacks, because you hack them and they don't have it, right? They don't. It's not stored on their servers anymore.
Right.
We're moving towards like a serverless. It's serverless, which has its own benefits from just like a technical architecture standpoint. But then it's also, you know, it's not just, it's serverless and the data is localized, so it makes it a lot harder to find targets to hack. Because when you're looking for targets, when hackers are looking for targets to hack, they want to find the honeypots. It's like they want to find, okay, there's like straight up a spreadsheet of like everyone's information. You know, worst case is like they're keeping everyone's passwords plain text, which the only organizations that I think would keep people's passwords plain text in today's day and age is like a government agency. That's the only org that I could think of that wouldn't be up to date. Yeah, like any kind of government agency is the only one that I can think of that would still be like worthwhile to hack right now. And you know, you saw like all the stuff, like one of the reasons why I really got interested in the decentralized identity side of blockchain was after the Equifax hack. Because for me, I was in school and I had never like used my credit score for anything. So my thought was like, well, I don't have a credit score because I never used it. So, you know, this hack doesn't affect me. My data was leaked and it was affected. I'm like, how was my data a part of this? You know, it turns out that I do have a credit score. It turns out that like Equifax has been buying information on me from the banks and from other companies. And they gave me a credit score whether or not I wanted one, and they charged me to see it, right? It's like, well, I need to go check my credit score now. It's like, well, it's $59.99 a month or a year to see your credit score. It's like, what do you mean? Like you made up this number about me. You're the one telling me that I need to know it. And now you're charging me to see this number that you made up about me based off of data that you bought from other orgs about me. And now you get hacked and now you lose all the data. And then 3 years later, you're like, oh, well, here's a settlement of like, what was it, like $79 per person for everyone that got their data like leaked and hacked.
Yeah.
So it just doesn't, I mean, that's why I'm glad that I think that the most pragmatic use case right now for decentralized identity is the decentralized credit score, because that's the one that, you know, you can make a credit score based off of on-chain data. One, on-chain data is like your cryptocurrency data and transaction history. Two, the more advanced like lending data that's on these decentralized finance platforms. So you can have like an interesting score, not just like, oh, here's how much you sent, here's how much you received, right? Like here's your net worth in cryptocurrencies. But then three, you can connect to legacy systems. So we're working with the Plaid API to be able to factor in like your traditional net worth, right? Your finance or your net worth from traditional assets into the credit score. So maybe some newcomers don't have that much cryptocurrency transaction history, but maybe they have a lot of like traditional transaction history. So that could be factored in as well.
Right. I see. Yeah. So I want to ask you, you touched on this a little bit already, but I kind of just want to ask you more directly, how sort of what this product, this digital identity that Ontology has means for the DeFi movement. Is this primarily centered around this decentralized credit score, or do you see Ontology's work contributing to the DeFi movement more broadly?
I think that the main value add is in the credit score. Or that's definitely the beachhead, because as mentioned, like that kind of really changes the game for what's possible. Is you can have under collateralized lending. You can have these elements of, you know, if it gets into non-fungible tokens, you can add the elements of the real world linking real world assets to the digital assets. And then just the reputation, right? When you add reputation to a system, it can really change the way that the system operates. For example, right now there's like an issue with like the yield farming, like the people are like farming and dumping. There's no reason to hold on to the token, and that's caused a lot of negative action towards a lot of like token prices for governance tokens. There's supposed to be a governance token. You're supposed to only buy it if you want to vote into the system. That's not what people do. Is they buy a ton of it because they're like, oh, this token, I want to buy it as an investment, and then the price goes down, and then you're like upset, and you're like, oh, it's a scam. So you're like, oh, okay. So introducing elements of reputation, what that does is like, say for example, the longer you hold this token, you know, the more your reputation goes, or like the more respected you are within the system, because you're kind of holding through the ups and downs, and you're more of an early adopter. And so that could be rewarded in different ways. So, or in, you know, the integration of vesting, right? Like things that, little changes that can make people more oriented towards being like long-term supporters of a project, rather than like these mercenary yield farmers that are kind of going from project to project. So I think that the introduction of reputation is important. But the issue is that like it's very hard to add reputation without an identity solution, because if you're just going based off of people's public addresses, you know, one person could have like 100 different accounts. So they're gonna have 100 different public addresses. So it isn't, if someone has a bad reputation, they could just create a new address and now they just start from scratch. So what the reputation, our identity element kind of aims at is like, well, there's only so many real world accounts you can link your identity to, right? So like when you create an address, you can use like, say the Wing platform, right? Which is a lending platform, as mentioned, the decentralized lending platform on Ontology.
Erick?
Where you use your credit score and you use your real world identity to lend on it. And then that gives you access to the, well, I don't need to over collateralize. I can just, you know, I put up, you know, my amount as collateral, which is less than 100%. It's either 100% or less than 100%. So I say $800 or $1,000, but then I can borrow $1,000, maybe $100,000, $200. So it's riskier because I might just like never return it. But if I never return it, then my reputation gets slashed and I don't get the borrow again. And then I create a new address to try to trick it. I can't because I linked the first address to my real world identity. So I won't be able to link it to another one.
Right, I see. Can you talk?
I think the other element,
please.
the other element is that's interesting is kind of more of a general thing. It's not unique to Ontology, but just the gas fees and the transaction speed. A DeFi platform built on Ontology doesn't have nearly the same level of gas fees as a DeFi platform built on Ethereum. So like I know that for some people, it's like easy to not realize that this is an issue, especially when you have like larger amounts that you're like lending and borrowing and even exchanging like on stuff like Uniswap. But for smaller people's balances or people with smaller balances, when they're actually trying to like make these transactions, if the gas fees are like $8, $12, $20 for every transaction, when you're lending, it's like, okay, well, I got to deposit. I got to approve the lend. Well, I got to approve as collateral. I got to approve the approval, then I got to approve the lend, then I got to lend, then I have to take the borrowing assets and do something with it. And then when I return it, I got to return it. It's another transaction. So there's like all these transactions, the gas fees, it's like, well, it's $100 just to interact with this platform for like a day. Whereas in Ontology, it's like people are using the Wing platform and people are swapping in and out and swapping the collateral, changing the collateral, closing out loans, starting new loans. And it's like super, super low gas fees for each individual transaction. So you could do it with like $100, $50, even $10, just start like earning on it and lend it out. So I think that's another element. It's not even related to identity. It's just the enabling access for more people to be able to use these DeFi services.
Right, which is super excited because I think what DeFi needs right now, we've got seen a huge increase in the total value locked in the DeFi ecosystem over the last year or so, but that hasn't necessarily corresponded to a huge amount of new users. So anything that can bring new users into the space is definitely a positive thing, I would say. Erick, I want to thank you so much for your time today. It's been so interesting to hear about everything that you're doing and that Ontology is doing. Before we go, do you have any announcements that you'd like to share? And can you tell us where we can find out more about Ontology?
Yeah, I think the biggest thing that we're excited about is the launch of the inclusive finance pool, just the IF pool for the Wing lending platform. That's the pool that I mentioned that you'll be able to use your O score to verify your identity and then get access to better rates, collateralized and under collateralized loans on the platform. And so what's interesting about that, right, is the announcement is not an announcement of this is here, this is happening. The announcement is that this is the proposal, and we've put the proposal into the governance forum. So Wing has a governance token also called Wing. And so we have a governance forum the governance forum is at gov.wing.finance. But if you want to learn more, you can just go to wing.finance, and that has all the links. And then on there is like all the proposals, and the community is looking at the proposals, adding comments and feedbacks to the proposals, refining them, and then we move it to voting, and then we do the on-chain voting, and then the proposals that pass are the ones that actually get implemented. So it's very much a community-led project. And so right now, that pool that I mentioned, the inclusive finance pool for the credit score integration, that's the one that's going through that whole process now. So even before it launches, people can get involved now and help shape the way that it launches. So that's an interesting thing if there's people that are interested in getting involved on that element. If not, and they just want to use the pool, if you guys just want to use the pool and it actually comes out, then you could just follow Ontology on Twitter, which is at Ontology Network, and Wing on Twitter, which is Wing_finance. And then all of the announcements are posted on there. It's probably the easiest way to like be in touch. But for anything else Ontology related, because Ontology is also working on other projects in the decentralized identity space, and we're actually working on some stuff in the automotive supply chain space, then you can go, the website is ont.io.
Okay. Erick, thank you so much for your time.
Thank you.
For more news, events, and podcasts like this one, visit financemagnates.com. I'm Rachel McIntosh. Thanks for listening.